focus to JSW Energy now because that stock is in focus on account of the large acquisition. It's doing quite well in the trading session. Let's take it across to Mr. Sharad Mahendra, the joint MD and CEO at JSW Energy. Hi, Mr. Mahendra. Good to be speaking with you. Well, you have managed to do a very large transaction, largest not only in the history of JSW Energy, but in fact one of the largest for the country as well as far as the renewable space goes. Tell me what gave you the confidence to go ahead and make such a large acquisition?
Two benchmarks are very, very important for us. One is our benchmark hurdle rates, which are the mid to high teen IRRs. And second, when we compare any inorganic opportunity, build or buy. So on these two parameters, this particular deal has been very, very attractive for us in terms of whether what is the tariff, what is the mix of solar, wind, or hybrid or FDRE, and build or buy when we compare. Like if we all know that if we have to build an asset, solar maybe taking a very reasonably aggressive target of 4.25 crores per megawatt and wind between 8 to 8.5 crores per megawatt. And when we say that fully built up 4.7 gigawatt, and when we evaluate, we have found this to be at a very, very attractive valuations, keeping in mind what the tariff is, blended tariff for this asset. So, and also it gives us immediate commissioned capacity, plus by June 25, this will be commissioned capacity will be 2.3 gigawatt, which will start giving us the free cash immediately, which will enable us for further expansion to reach 4.7 gigawatt commission entire portfolio. And apart from that, one of the big rationale was that we all are seeing in the country the energy transition, the speed at which it is happening. One of the key challenges which we anticipate going forward is the people skill set to execute and the new capacities. So this asset is a very high quality asset and built by very high quality professionals. So we are getting the entire O2 team also to be part of JSW Energy, which will be a big boost for us, not only in terms of completing this 4.7 gigawatt of O2, but also to support in JSW Energy's plan of capacity additions, what we have laid down for next maybe 4, 5 years, 6 years time.
Right. So, Mr. Mahendra, you've got a very good asset at a reasonable valuation, meeting all the hurdle rate demands, etc. But does that mean that the asset will, let's say, be EPS and value accretive from year one itself? What's the payback time?
See, numbers are dynamic, as we know that the enterprise value of close to about $1.47 billion, which is about close to 12,470 odd crores, is the EV for this asset what we are paying, which is a mix, because this we have to remember that this deal is to be consumed in maybe 5 months time period is there from the signing of the SPA. We are sure that it will happen maybe earlier, but that is the time. This is a very dynamic number right now. Giving on the financial numbers right now may not be appropriate because a lot of net working capital adjustments will happen. So that is the time when we close the deal. That will be the time when we will be coming out with the financial numbers in terms of, but yes, it is a mix of internal accruals and if required funding. And our balance sheet, as we know that everyone knows, that is very strong. Closing September, H1 closing, we have had reported a free cash of almost 5,700 crores. So our strong balance sheet supports this, and that is not at all a challenge in terms of funding this asset.
Right. So apart from this large O2 deal that you've done, anything else which may be in the pipeline? What's the latest on KSK Mahanadi?
See, KSK Mahanadi, as we all know, we have been declared as the successful bidder. This is the IBC process which is going on. And now the process takes its own time. Maybe it may take few months, 1 month, 2 months, 3 months, no one knows. But yes, the process is on. We have been declared as the successful bidder. We are waiting for the LOI to be issued to us, and after that the matter will move to NCLT for the final approval. But yes, this is a very, very attractive asset, close to the coal mines, 1.8 gigawatt, very high quality asset operational, and another 3 units of 600 megawatt to be made operational, out of which fourth unit, almost 40 to 50% of the work already done. balance of plant for entire 3,600 megawatt is ready. So I think it is a very, very attractive asset, and this will add lot of value to us and to our shareholders once the process gets completed. So this is what in thermal space. Apart from that, in renewable energy, I like to again reiterate that we have been saying of 20 gigawatt by 2030 and 10 gigawatt by March 25. Without any inorganic opportunity, we are on track to be close to 10 gigawatt by March 25. O2 operational portfolio will further get added, and by June 25, 2.3 gigawatt of O2 portfolio will be fully operational. Plus, by that time, we expect that the KSK process will be completing. So I think we'll be far ahead of 10 gigawatt by June 25, and then further capacity additions of greenfield project next year. So we will be very soon evaluating and sitting on the decks, doing on the drawing board to set up the revised numbers for 2030.
Mr. Mahendra, all of that sounds really good, but since you're doing so much in terms of both organic and inorganic growth, how's your debt shaping up on the back of this? What's the maximum level of debt that you're okay taking on the book? What's the maximum debt to equity ratio also that you have in mind, if you could share?
See, when we talk of one is debt to EBITDA, industry we all know is very comfortable. Even the rating agencies and the industry average is ranging between 5.5 to 6. And we have been, as we have reported in September end, that we have been debt to EBITDA of almost 4.1. And if we remove the construction work in progress for the operational capacity, this ratio was 2.2. And with free cash of 5,700 crores reported on in September 24, we are very, very comfortable in terms of the acquisition, and with the capacities getting commissioned and this availability of free cash continuing to be there. So I think financing will not be a problem, and we'll be well below the industry average in terms of debt to EBITDA going forward also, even with our aggressive plans.
Okay, well, you've also been speaking about the role JSW Energy is playing in the group when it comes to the entire EV aspiration. The latest reports doing the rounds are that you're also in talks with major battery players globally as well. That is LG Energy is what we're hearing. What's the latest on that front? Could you confirm or deny whether you are in conversation with these players or not?
See, when we talk of in the energy space, the role of battery, whether it is in the storage or in the electric mobility, these are the two things which are very much going to be in demand going forward, because electric mobility also, the way now the transition has started, and it has just started, and also the battery energy storage. So we see this as a big opportunity, and also the de-risking rather than depending only on imports. So we are evaluating, talking to all global majors, good companies who are in this in terms of technology. So we are in discussions. As and when anything concrete comes up, we'll be definitely informing. But yes, we keep evaluating the opportunities with a major objective of de-risking our existing business, and also in addition to if there is any opportunity which exists in this space.
Looking at de-risking business and looking at those global tech players, perhaps for some sort of tie-up, we'll come back to you and ask you more questions as and when you do fructify that deal. But before we let you go, Mr. Mahendra, a quick word on the overall power demand, because of late the GDP growth had slumped a bit, and part of the reason was also the slowdown that we saw in the power demand. Do you think we have peaked in terms of the power demand and we'll be back to that 6-7% growth going forward?
See, this year, if we see that H1, we have seen subdued demand growth. Demand has been growing, but there was a subdued growth as if we compare with previous 3 years, when we have witnessed maybe 7%, 7.5% to 9% year-on-year growth in last 3 years. This year has been slow, but we have to remember two significant events which were there in first half of the current fiscal. One was the elections, because of which, as we have seen the numbers also, that the government spent in H1, as if we compare with previous year, same period, was slightly lesser as compared to what the government spend was there. And then the extended monsoons also, these were the two factors which led to. But last 3 to 4 weeks, again, post-monsoon have started showing One is the tariff moving upward and also the demand growth improving. So we don't see that. We see as a very temporary phenomena with the country. Even if country grows at 6.5% to 7%, 6.5% also, the power demand, because this growth is primarily driven, we all know, with urbanization, with manufacturing and industry-led growth, where the power demand and with this data centers moving to AI also, AI centers, I think the factors are very, very conducive. The demand growth, we estimate, barring exception of the current year where we may witness maybe 6.5%, 7.5% growth, the demand growth will continue to be there at least for next few years. We are absolutely confident.
Right, Mr. Mahendra, great to have you on the show. Thank you so much for your time today. Well, that's...
If you like this video, then like, share and subscribe to ET Now.